Hello everyone, it's Red with RedDragonLeo.com. It's September 20th, 2015. Well, we had a crash on August 24th as predicted in the Lucy movie from the expiration date of the passport that she had. On the previous post I did here, as you all know, I did it about 2 months in advance, saying that something bad was going to happen on that date, and we certainly got a crash. It's just like in the movie The Matrix with Neo and his passport expiring on 9/11/2001. And of course, we had the Twin Towers attacked at that point. Now, at least this time we didn't have anything disastrous, a false flag happen in Pennsylvania. I'm so glad for that. But I was certainly a little concerned about that as well. But we basically just had the crash. Moving forward, though. I think that we probably have had the top end for the year. We certainly have ended primary wave 3 up, which is basically from the 2011 low and ended, I think, this May, obviously, and we are now in primary wave 4 down, and we've got primary wave 5 up yet to go. So there is a post here that I copied from someone else. Scroll down here and make sure you read it. But it's pretty simple, straightforward. It's basically someone went back and did a study to see what happens when you get 2 monthly closes below the actual 20-month moving average on the monthly chart, to see if you have another higher high. And yes, it was this one here. And they went back all the way, I'll let you look at it, but they went back all the way to 1929. And every single time you had a top, every time you had 2 closing monthly bars below the 20-month moving average. In every case, the high was in, and it bounced and went back up, but the high was in for a long time, and it sold off and continued down. So basically what we're looking at here this September, we got this week and we got next week. It's only got 3 days in it, to September 30th, I think, is 3 days in it. So you basically got 8 trading days for the market to recapture 2,000. And if it can recapture 2,000, I'll change my tune, but I don't think it's going to. And the reason for it is this chart here. This chart here shows that this is the going into the very bearish period. We are on week 38 right here, and as you can see, the average return is down. Next 3 weeks in a row. That is this week, September 21st through the 25th, I guess, and then the following week, the 28th through the 30th. Or all the way into September 2nd, or October 2nd, I guess. And then that 40th week is the first week of October. So you got 3 weeks of very bearishness, and we're already below the 2,000. We've already had the Fed meeting, as you know. They did not raise the interest rates. So there's really, and the market sold off because it ran up into it. So I don't know how positive you can be if the market sells off in front of, the market sells off after you have such a positive announcement, because traders were certainly looking for that, but it was the old buy the rumor, sell the news, and that's what happened. So there's nothing left out there positive that I can see that's going to spark a rally. And from a technical point of view, in the short term, I don't see it either. It's a bearish period we're going into, and for the next 2 weeks, and you basically got 8 days to get the market back up above 2,000 on the close. Now, miracles have happened. They do manipulate this market, but assuming that doesn't happen, then basically we're going to be closing below the 20-month moving average for the second month in a row. And this is a chart from Ron Walker. He does great charting, so I borrow his charts from time to time. But you can see right here, the 20-month moving average is at 2,000.39. And we already closed last month in August below it, and I think we're going to close this month below it as well. And as far as on the short term, I think that basically inside of this primary wave 3, we've had 1, 2, 3, 4 waves, and I think we're about ready to start our 5th wave down, and it'll last the next 2 weeks, maybe into the first week of October possibly, and then it will end. I think it will end below this 1867 low. I think we're going to probably go closer to 1800 to 1820 area before it bottoms, and then that ends the primary wave 4 down. As you can see, then you got primary wave 5 up left, and you don't, when you look at this and you see that basically you started here at this 2009 low, you hit primary wave 1 up, primary wave 2 down right there in 2011, then primary wave 3 took 4 years. Primary wave 4 is short, taking basically from May, the May top, all the way to, let's say, end of September, 1st of October. So it's what, 4 or 5 months. So the primary wave 5 up, it is not a long wave. In most cases, it is 2 to 6 months max. So it literally could be over with by the end of this year if it's only about 2 or 3 months. And I think that's what's going to happen. I think the wave is going to truncate, and meaning that it's not going to go up and take out 1835 or 2135. That it's going to go up here maybe to 2000, or maybe even, well, it'll probably go higher than 2000. I'm almost saying 2050, maybe even to 2100 by the end of the year. Maybe. That's why I think it's going to go. Lower high, that's going to be your primary wave 5 up. But I don't think it's going to start until we first go down in primary wave 4, which I think is going to be around 1800 or so. And so that ends that. Then you go up, and then that's it. It's over with. And that's a lot of the reasons for that, obviously, is this chart. The fact that going back to 1929, when you look at all the other times that you've had 2 monthly closes below there, that was it. It basically went down, went back up for a couple months, and then it crashed. And same thing here, went down and went back up and retested it, and then it crashed. Once you get 2 months below it, it's done. It doesn't recapture it. And I think that's going to be the case here. And, you go down here as well, down to a lower level here, and you can clearly see we're still pointing fully down on this full stochastics. I see no reason for this thing to turn back up. There's no historical pattern showing that it's going to turn back up and rip higher on a monthly basis. It's just not. Every time this has happened here, when you look here at 2000 area, once it started going negative like this, it just continued negative all the way down here to negative 40 or something. This one went to who knows what, negative 60, negative 80 area. Went pretty deep. So there's no signs of this thing turning back up and going and making some new all crazy high at 2200, 2300, 2500 that people say. It's not there. It's not there. I don't see any reason for them to do it. On a political arena, the Obama's last year is next year, and a new president comes in. It's very likely that it's all planned for 2016 so that they can blame it all on Obama, and new president comes in, tries to save the day. New gangster comes in, whoever it is, who cares? And so the timing of it is perfect for him. Plus next year is a 9-year, 2016. 2 plus 0 plus 1 plus 9, or plus 6 equals 9. And numerology wise, 9 is a completion period. So it's a completion period for this whole rally and everything like that. So everything tells me that they will crash it next year. It'll look like this 2008, only worse, because I think we're going down much deeper than even this chart. I think we'll end up breaking this, but that's 2 or 3 years out. I think it'll end up being 2019 or 2020 that it finally goes down and breaks the 666. If it goes down to below the 666, we're talking 400 area on a rising trend line from 1929. If it doesn't, if they only stop it like right in this area, 1,000 to 1,100, in that range, there's a rising trend line from like 1974 that connects to 1982 or something that gives support there. So that might be a first bounce. It might be another bounce right here at 666 low for horizontal support. and then a final low in 400. But this is way too far out. But I just want to give you the big picture. The bottom line is, I think in the next 2 to 3 weeks we're going to go down here and break 1867, probably 1800 to 1820 area, then bounce in an ABC up, A up into November down some for B down, and then C up to end of the year December, and possibly re-get 2100, but certainly above 2000. So somewhere in that area, 2050 maybe, is what I'm thinking. And at that point, that ends this whole 5-wave series up. Once a whole 5-wave series is up of primary waves, I think Tony Caldero, he labels it best. I think he calls this a cycle wave, some type of cycle wave 1 or cycle wave 2. I don't know which one it is. But at that point, you have another big cycle wave down, and inside that, of course, you'll have your 5 primary waves, I guess, or at least 3 primary waves. But I think you'll have 5 primary waves in it because it's going to be such a massive crash. So, let's see. Try to give you the big picture here because I don't do these posts every day anymore. There's just no point. I can do it all on Twitter and then the comments here and discuss. Every day I put up updates here in the comment section for discuss, and then I retweet them so that you guys know what's going on that day. So I just try to give you the big picture here on what I think is coming, and then you guys can check the comments out daily if you still read the blog. Just go scroll down to the bottom and check the comments out. So, let's see. I think that is everything that I've covered. I can't think of anything else. So what we're looking for is, again, a close below the 20-period moving average around 2000 by next week, September 30th. If it does that, then there's high odds that the all-time high is in. There'll be no higher high. It's done. Toast. All we'll do is bounce in December all the way up to maybe 2100, but don't get all bullish and think that we're going up to 22 or 23 or 25. This analysis someone else did clearly states that every single time that it's happened in 2000, 2008, all the way back again to 1929, I think they did 4 or 5 of these. It clearly states that every single time the high was in. There's just so odds are extremely stacked against you just on a technical basis. Then you have to throw in the political factor that Obama's last year, that they want to crash it, to blame it on him. You have to also think of numerology, 2016 being a 9-year, meaning the word completion. There's just everything tells me that as long as they stay below 2000 here in September, that the high is in, it's done, and that they will crash it next year. So, okay, well, that's it. I can't think of anything else to put up, so we'll end it here, and I'll put updates on the blog and just continue to go check the comment section, guys. Thanks a lot. See you guys.